Welcome to another episode of Should My Money Be Scared with Agent Cory Banks, Real to 007. And the purpose of the show is to talk about different things that's happening in the real estate industry surrounding COVID 19. And today, I had some more questions about lending from some of my clients and some of the people that um, they'll follow the show and just as people I speak to on a regular basis. So I decided to have one of my very good friends, Eric Stewart, on the show today. Um, every day we broadcast the show Monday, Wednesday, Friday at 4 o'clock on Monday, Wednesday, and Fridays. And again, we just talk about those different issues that we talk that surrounds the real estate industry. So, without further ado, let me bring my man Eric on. E,
Hey Corey, what's going on?
what's happening?
All is well, my friend.
So first, for the people who don't know who Eric Stewart is, and I know it's not many, so it's okay, right? But for the people who don't know who Eric Stewart is, first tell them about yourself.
Well, I'm a mortgage lender.
Well, thank
So I own the Maryland branch of residential home funding. I have gained quite a bit of notoriety in the community, being the mortgage expert, about 35 mortgages for about 6 years. I have on television show and on radio show, Commerce Power for about 6 years. I appear daily. Now, uh, I've been with residential home funding for quite a few years. We're a national lender, and we can lend as well as brokers. So I see both sides of everything that's going on.
and let's try to do one thing because I can hardly hear you. It's like an echo. Is it possible you can get closer to your phone where we can reduce the echo?
Yeah, I'm actually using the computer. Is that any better?
A little bit.
I have a feeling that the computer might instead of the phone. But yeah, I can hear all the feedback.
Say it again.
I said, yeah, I can hear all the feedback as well. It's bad.
So you're getting feedback on your end?
Yeah.
Okay, hold up. Make sure you don't have any open mics or anything like that.
No, just this.
Okay. Wait a minute. Okay. Well, you had your radio show, um, and you also did Fox 45. The Mortgage Minute is when I first heard about you,
Yeah,
and now you're with Residential Home Funding, correct?
that is right.
Okay, so we're there,
So
and
I've been in the mortgage business for coming up on 25 years.
25 years. Okay,
Yeah, I've been
somebody's
doing
get,
this a long time, and I've seen these kind of events before and the way that they shape the financial markets and the way they shape the mortgage industry and real estate industry specifically.
now. What have you seen before, and how is this similar to what you've seen before?
Well, I've seen the birth of the subprime market back in the early 2000s, late 90s, where lenders started becoming more creative. It was very difficult to get a loan prior to that using conventional financing. I've seen FHA lending come and go and come, and then become a very prime source of lending. I've seen borrower requirements reduced down to having no documentation, and I've seen the crash of 2007, 2008, being the regulation of President Obama and what that did to the market. So some of these things affected the mortgage market, some affected the real estate industry, and then those cataclysmic events affect both, like the crash of 2008, caused people to lose hundreds of millions of dollars in equity, as well as you saw the economy crash. And right now, that point, the crash was caused directly from bad actions in the mortgage and real estate space. This is something totally different that we
Mhm.
haven't seen before, but some of the same rules still apply. We're going to see a bit of a correction, not a huge correction in value because demand is still way up. I mean, there's not enough inventory from a realtor's perspective, right? So there's still going to be a lot of demand, but you do have a lot of consumers that will be disqualified from buying that.
So,
Um,
so what you're saying right now, you haven't seen a slowdown in the market from the mortgage perspective.
oh my goodness. Right now, anybody who owns a home pretty much should be getting in touch with me or any other lender to find out if they can save money. There's so many people, and this is what happens. We're always, the common folks are late to the game. They don't
Mhm.
find out until it's too late. So a few months ago, right before this happened, interest rates were down in the low threes. As this started to take shape, the COVID-19 started to take shape, interest rates dropped in the twos, and the smart money got to it first. They
Right.
refinanced that now have a 2.75 interest rate for 30 years. It's the same as the stimulus money. Common folks find out late, the big corporations go in and swoop up all the money, like these folks got a ridiculous amount of money I'm sure they didn't need. And then the small mom and pop stores that really need the money, they go and it's all out. So our job, I think, Corey, is to let people know that they need to take advantage of not just what's available right now, but what's coming. And what's coming is that interest rates are going to plummet. Two reasons. We're in an election year, and always the incumbent tries to make sure, in order for reelection purposes, that they have a strong economy, low mortgage interest rates, plenty of available cash. That makes people feel good and makes them vote on that side. The second thing is that we will be in a forced recession due to COVID-19.
Hmm.
You know, it's going to take a while to recover. And in order to stimulate the economy, the reaction is to lower interest rates, make money more available, more friendly terms. So you may see the credit qualifications actually get reduced after this whole thing to help to get more people money so that they can buy a house or refinance their homes.
Now, with that being said, because if you're saying that interest rates are going to plummet, which means that um, you have lower payments on your on your mortgage payments, but then at the same time, inventory is still low. With that being said, do you see it going towards heading towards a buyer's market or a seller's market after the whole COVID-19 is over?
It's a crazy question. So, and you've already experienced this now. It's a
Mhm.
battle on every single turn. So, one property, it may be considered a seller's market. Around the corner, or in another zip code, or another price point, or last week versus this week, it may be at a buyer's advantage.
Mhm.
So, overall, what I see is it's still heading to be a seller's market. That doesn't mean you shouldn't buy a house. It just means that you're going to be in competition when you buy.
Right.
That's the only thing seller's market and buyer's market means. It doesn't mean if it's a seller's market, buyers should not buy. It just means that the negotiating advantage would be on the side of the seller as opposed to the buyer. So maybe a little less help from the seller. You may have to outbid the next person that's
Hmm.
coming in, or you may need to come in more highly qualified than the next person because the laws of supply and demand say that when there is less supply and more demand, you're going to be in competition.
And I'm glad you said that because a lot of times when we educate some buyers on the market who are coming in, who are looking to buy a home, they always assume that I'm the one that has the money, so I can offer whatever I want. And a lot of times they end up losing the house and it goes under contract. So if a house is 200,000 and they're like, well, I'm buying, and cause my aunt, she bought a house 20 years ago, and when she said that when she bought the house, she purchased it for this. So I'm gonna offer 180 on a $200,000 house in a seller's market and end up losing and trying to figure out what happened. So I'm glad you're saying that because a lot of buyers lose out because of that.
They
Now,
sure do. And
mhm,
let me just share this story because I've been dealing with something exactly like that over the weekend. Actually, due to it being a seller's market, the seller, the listing agent, may list the property lower than what
mhm,
it's really worth
right,
because listing it at the retail price that it should be sold, which is what most real estate agents do, is going to attract a fair amount of activity already. But
mhm,
if you list the house $5,000 or $10,000 lower, you're going to attract a tremendous. So imagine if you're going out looking at big screen TVs and you go to Walmart, you go to Kmart, and all of a sudden Target has that same $500 television listed for 350.
right,
People are going to be lined up out the door, and that's the strategy that a lot of listing agents are using. So coming in thinking you're going to lowball the
mhm,
listing is ludicrous, and then buyers have to learn that lesson by losing control because they realize this is not buying a used car.
right,
Cars, you list the price is high, and then you bid them down.
right,
Houses are the opposite. Oftentimes, they're either listed exactly what they're really worth, or they're listed lower than they're worth to create bidding competition.
right. And even to that point, because having conversations with sellers and you're telling them, yeah, let's put the let's put the price or the listing price at less than what it's worth. Now they're looking at you like you're crazy. Then you have to explain that whole process of pretty much how you're creating this sense of urgency. I have to get on that. And if one buyer is saying that and is in the seller's market, now you have more buyers saying the same thing, and now you create a situation with multiple offers. So definitely,
Here's a perfect example. My client is pre-approved um, and found a house for 279.9.
mhm,
They were going to put a full price offer. We convinced myself and the buyer's agent convinced the buyer to up the offer to 280 to 284 because they were looking for 4.5% seller help.
right,
The listing agent was nice enough to contact. We knew that they had multiple offers.
mhm,
They have in hand 10 offers on the house right now, and our offer is the lowest because the
wow,
house actually is worth 300,000 um, when you run the funds.
wow, wow,
So create stiff competition, but you have to have a smart real estate agent that can advise you on what you really should offer based on what the market dictates.
definitely, definitely. And for the people who are just joining, you're watching Should My Money Be Scared with Agent Cory Banks. And today's special guest is one of my very good friends. And you hear me say that a lot because I have friends in the industry that we have other conversations too. But this is definitely one of my very good friends, Eric Stewart, and expert mortgage lender. And we're talking about how lending has been affected by COVID-19. Um, Based off of going back to the interest rates to with the already homeowners, right? The
Mhm.
homeowners are ready. What about refinancing? Is it a good time to refinance right now?
Corey, so this couldn't be a better time to refinance. And it's been that way for a while. Now, we've seen some wrinkles in the market. For instance, 3 weeks ago, the government announced that they were going to mandate all lenders that had FHA or VA government loans
Mm-hmm.
in their possession to allow the person who has the mortgage to just skip the mortgage payment for the next 6 months. No penalty, no questions asked, no proof of hardship. Just
Wow.
all mortgage companies say, hey, you're not getting paid for the next 6 months.
So hold on. Let's go. Let's make that point. Now you're saying one more time. You said that at this point the government has said we that homeowners can
Mandated.
skip payments. Mandated. They mandated that homeowners can skip 6 months of payment because of this, right?
If they have an FHA or a VA loan, which is a
With
government loan.
So if you have an FHA or a VA loan, then the government has mandated that you can skip your mortgage payments for the next 6 months. Now, going back to refinancing, how does that affect the refinance?
If you took advantage of what the government told you that you could do,
Mm-hmm.
you are no longer eligible to refinance.
Okay.
So if you are not truly under hardship, do not try to take advantage of skipping the payment. First of
Right.
all, the lender has three options for recourse.
Mm-hmm.
At the end of that 6 months, they can demand, legal and demand, that you give them 6 months of mortgage payment. So if the
Right.
mortgage payment is $1,500, you got to write those checks for 9,000 plus the 1,500 you owe for month seven.
Mm-hmm.
That's the worst case scenario. And also, you'll be disqualified from trying to refinance because you'll have a forbearance in your credit.
Mm-hmm.
So if you don't need it, don't do it. But I made the point that the government did that, and basically, here's what people don't know. Your mortgage lender who has your FHA mortgage, if you don't pay them, which now the government has told 26% of all people have taken advantage of this
Mm-hmm.
that have FHA loan and not paid. If you don't pay them, the lender still has to pay the investor for the money you didn't pay. So imagine if you're a lender and you normally were collecting $100 million from your folks that had the mortgage and
Mm-hmm.
then writing a check for $100 million to the investor. And the guys who have the mortgage stop giving you money.
Right.
Now you're going in the hole, 100 million, 200 million, 300, $600 million after 6 months.
Right.
So it created a tremendous liquidity issue. Banks don't have the money to lend out to people trying to refinance.
Mm-hmm.
And so their reaction, since the government bailed out the consumer for a change instead of bailing out the bank's reaction was, we're just going to make it impossible to get an FHA mortgage. They raised the credit score requirements from a 580 score to 700 in some cases.
Right.
And then even if you could qualify with a higher score, they went in and created additional margin. So if you close that loan, you had to pay an extra $10,000 to the bank in what's called floor.
So let's stop there real quick because I want to go back and then because that brings me to my next question as well. Um, so first, you hear a lot to my people that's listening. First of all, if you guys have any questions or comments, please leave them in the comment section, and I'll be sure to get them answered for you. Now, to the people that are listening and watching, yes, there is a mandate. Whereas though, yes, for 6 months you can not pay your mortgage, but remember there are consequences at the end of that mandate as well. And so the whole point is don't do it if you really don't need it. Because even with that, now going back to the refinance, if you are still making your mortgage payments on time and the interest rates are low, and from your prediction they're going to get lower, if you are making your mortgage payments on time and then you refinance, would you benefit from that refinance with the lower payment because of the lower interest rates?
And don't forget, if you refinance, you're going to legitimately skip a couple of months of mortgage payments without getting penalized or marked
Right.
rare. For instance, if you close on a refinance June the 10th, you won't have a mortgage payment due until August the 1st.
Right. So now, so with that being said, it sounds like what you're telling me because I'm not a lender and I don't want to give out information, lender information. So I'm gonna say it in the form of a question. It sounds like what you're telling me is that if the better option would be to see if you can refinance right now, and now you're still not looking at a payment until August versus just not paying anything at all, and you'll end up benefiting in the long run with the lower payments going moving forward versus just the short term and not paying anything at all. Would you say that's correct?
And on top of that, Corey, let me just tell you, three of the transactions I closed last month. One buyer saved $500 a month. Another saved over $700 a month.
Okay.
I had one of the biggest savings I've ever seen on refinance. He saved $1,100 a month on just a rate and term refinance. Now, he had a high interest rate. He just bought the house last year. Had to use an exotic loan to get it
Mm-hmm.
because they're self-employed, had to file taxes. But after they filed their taxes, they came to me and said, "Can we refinance?" And we refinanced and we saved $1,100 a month,
And that was after how long did they own the home at that point?
9 months.
9 months. So after 9 months, they were able to save $1,100 off that refinance. See,
Yeah.
and again, I'm glad we're having this conversation because this is why the purpose of this show to give out the information because there's so many things that's coming to the consumer, and I want to make sure that they're getting the correct information directly from the experts that's consistently doing the business on a regular basis. Now, going back to some of the requirements in the credit requirements, and also some the stricter or tightening of requirements for the buyer. What are some challenges that you see that you're seeing now that the buyers are having when obtaining mortgages?
Well, first of all, FHA, that was a few weeks ago, and this thing is something that you have to monitor on a daily basis. It's up on this stuff 5 to 6 in the morning to watch 12 MSNBC, CNN, Fox News, before I even get my day started. It's something you
Right.
have to be ahead of the game with. And, that is how I position myself, is to be able to understand those sophisticated concepts that are going on Wall Street, things that are happening globally, and being able to translate those to common folks so that they can understand how it impacts their situation. So that being said, with an FHA mortgage, they have calmed down. It's not costing you an extra $10,000 to get a loan with FHA now. The other thing is the score requirements. Some lenders are still at 680 and 660. We actually are at 640, so we're a little ahead of the curve.
Okay.
Also can broker back down to the 580 credit score. So people that are just in that in between zone,
Mm-hmm.
we're still able to do multiple help. So that's one thing. But I did want to go back to the savings. So the $1,100 a month savings, that's a unicorn. That doesn't happen often. But the $500 to $700 a month savings, let me tell you the trick how I did that. I helped
You giving
my
them secrets now? Okay. Let's talk.
I helped my buyer who was in an FHA mortgage refinance to a conventional mortgage. Now, mortgage payment has principal, interest, tax, and insurance as a common component of every mortgage. FHA mortgages have mortgage insurance as well, which is another couple of $100 a month on average. Conventional loans have the same thing. It's called PMI, private mortgage insurance. However, most folks don't know that you can buy out of the mortgage insurance.
Mm-hmm.
So for just $1,000 more or $2,000 more, you can get rid of your $350 mortgage payment. So my client, even though he still could have that mortgage payment, we got rid of that, and then we took him from a 5 point something interest rate down to a rate in the low three, and he ended up saving. That's how he saved 700 a month. So a
Now,
lot of people are not taking advantage of getting out of FHA and looking at themselves as a conventional owner now.
well, let's go back to that because you actually put a number on it. Now, um, in comparison, if you're saying that he paid an extra $1,000 to get rid of his PMI, in the long on the long term, let's say he went the next 10 years or 5 years paying the PMI, how much more would you have estimated he would have paid versus the just $1,000 to get
Or
out of
his
it?
PMI. I mean, this is one of my good clients, repeat clients, um, that I've worked with him on his rental properties as well as his current property. His PMI was like $350 a month. So the juice was definitely worth the squeeze. It only took a few months of having a new mortgage, and he makes up for the small extra. And it's not cash out of his pocket; it's just part of the transaction.
Right.
The only out of pocket expense to get your home appraised.
And see, the reason why I'm asking the questions like this the way I'm asking is because of the fact that a lot of my clients, my investors, I always let them know that this real estate thing, unless you're a fix and flip investor, or if you're a wholesaler or something like that, most of the time when we're looking at real estate is a long-term investment, even on the residential side. So some of these things that you're doing in the short term, when you talk about $1,000 or not paying your mortgage because now there's a mandate, is gonna have a great effect in the long term, good or bad, depending on what you're doing in the short term. And I want to make sure that we bring those points out because it's not just about the information that we're getting now. It's also about the education in the long run, so we can put more money in our pockets based from our real estate investments and things of that nature. So I greatly appreciate that. And I know that's one of your biggest things because I listen to you when you talk to your clients and how you make sure that you're educating them on just the whole process from start to finish and then beyond once they own in a home and what that looks like. Um, now we now there's a lot of I deal with a lot of investors, and then there's a lot of realtors and self-employed business owners. How has COVID-19 affected the self-employed buyers who are looking to buy a home?
Great question. So those that have been in the industry long enough can remember the no doc loans and all of the subprime loans that allow real estate investors to buy a property without showing their tax returns or stating their income if they were self-employed and that sort of thing. Those loans are actually back.
Oh,
COVID-19 pulled them off the table, but um, there was a loan product that allowed investors to go in and buy a rental property strictly based off of the debt service of the property. Okay? So what that means is that the investor didn't have to show any documentation of income. No tax returns, no 1099, nothing. All they had to do was prove they had the money to put down on the house. Obviously, it's going to be a higher down payment on this type of loan because there's no income documentation. They did have to have good credit scores, okay, 640 and above, and which is not, that high of a score for an investment.
right.
And basically, it was this simple. You're buying a house. The projected rent on the house is 1,500. The mortgage on the house is 1,100. Deal.
Now,
You're done
I,
until you close the loan. That's simple. That product has been taken off the market a couple of weeks ago, but I just got an inside scoop that the product is going to be relaunched in the next couple of weeks.
yo, E,
One of the
E,
only
let,
lenders that will be offering that on the lending side. There will be a lot of people out there that can broker that loan, basically be the middleman or third party. We have the money directly that we're going to be introducing.
yo, E, I gotta look, because we gotta talk about that, right? Now, what you're telling me, this product is going to be available, is going to be reintroduced in the next few weeks, and the qualifications you're saying, um, for a self-employed buyer, you're saying that the qualifications, you're just looking at a 640 credit score.
Listen, they don't have to be self-employed.
Okay.
They're an investor, no documentation required.
Mm.
This loan can be closed in the name of an LLC.
Ooh. Ooh. To all my investors, I don't know if you're listening right now. I'm hello, y'all can hear me? To all my investors, understand what he just said. 640 credit score, no doc, and you can purchase in the name of an LLC. So if you're a buy and hold investor and you're looking for better rates, you don't really want to go to your hard money lender. Now, I would assume that it has to be turnkey. It can't be it can't be anything that needs repair, correct?
It can't be a renovation project.
Okay. Okay.
Livable.
Right.
It does not have to be already finished. Like it doesn't have to be already renovated. It just can't be a shell that you get because it has to have, you
But
know, it can't be the assumed rent value after repair.
wait a minute, cause you're dropping this jewel. And what's up, Bryant? What's up, Corey? What's up, McCullough? So you're dropping this jewel, and Bryant just left a comment, and he's like flabbergasted right now. He says, "Did you say in the name of an LLC?" Yes, Bryant. He said in the name of an LLC.
Yeah. And
Okay.
so, Corey, let me correct you though. My gut tells me that they're not going to reintroduce this at those low credit scores anymore at 640. I think they're going to take it up a notch to like a 680 score, 700 score, and also that they will require a higher down payment than they were
Right
before. But it's still,
now.
there's no product like it I've ever seen.
Oh yeah, I mean either way is a powerful product. So even if you're in a situation where your credit score is not at a just say it's gonna be a 680 and
Not
higher
really
down
yet,
payment,
because it hasn't been
right?
reintroduced.
Right. So my point, even if that's the case, now this is also the time when we talk about partnerships, right? So that means that if you have someone who has a better credit score and can meet that credit score requirement, and we're talking about a no doc loan, even in the situation where you can get it in the name of an LLC. Now this is the time to start partnering and finding out who you can partner with that may have that credit score. You may have the money, they may have the credit, or they may have the credit, and you both can put your money together. So I'm just saying,
Very
I'm
true.
just saying, um, get 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 ready now. And you're saying within it now. Since we're talking about that, what about any other investment products that you're seeing that's out there, or
So,
that's been taken off, or maybe coming back?
so one that had almost been removed from the market for self-employed borrowers was the bank statement program.
Mhm.
So most self-employed people, this is how it works. Their business makes $250,000 in gross receipts. They go to their accountant, and their accountant figures out every way why they needed $240,000 to run that business. So that this self-employed person owes $10,000. Makes sense Except when you walk into a bank or lender like myself and say, hey, I net $10,000 a year and I'd like to buy $500,000. No dice.
Right.
When really this person can easily afford the mortgage payment.
Mm-hmm.
But tax wise, tax preparation wise, it doesn't sit.
Mm-hmm.
So the product allows for the business owner to use 12 months of business bank statements and to create their own profit and loss statement to say, my real expenses were $50,000 and I really netted 200,000. And of course I can afford this home. So that's a 12-month or 24-month bank statement program, and that's red hot. The interest rate's higher, but it allows you to make your acquisition on an owner-occupied property, um, and pretty straightforward. Cory, I think Cory, you there? We can't hear you. So I think Cory is having technical difficulties, and I know there are a lot of real estate agents that are tuned in right now. So I just wanted to share the point that it is a smart way for you to market to your previous clients and prospects that maybe have purchased a home. It's a reason for you to contact them and say, hey, I just wanted to be an added value and give you an additional service to let you know that it's a good time for you to refinance and lower your payments. I just was calling to help you out. I was thinking about you now that you bought your house 2 years ago with me. And by you assisting those folks, it's a good reason for you to contact them, check on them something of value, which is more knowledge about reducing your
Can
payment,
can you
and
hear me?
possibly get referrals.
Can you hear me?
Yes.
Okay.
So
So
Cory, I just was given a tip. I'm not sure if we were tuned in or not. So I just went on a little bit of a rant.
well, I
I'll say
appreciate
it
it.
again. I wanted to offer some gift of value to all of your real estate agents that are listening and give them an excellent strategy to gain some business and gain some referrals. The strategy is this. This is a perfect time to reach out to your existing database
Mm-hmm.
of people that have bought homes with you and just check in on them during COVID-19 and let them know that they can refinance and lower their payments, either by lowering their interest rate or by switching from an FHA loan to a conventional or from conventional to conventional because interest rates are in the low threes right now. So by you calling them, checking on them during this time, and also offering them a gift of value, the likelihood is the last thing you said before getting off the phone is, and by the way, do you have someone you'd like to introduce me to that I can help purchase their home like I did you? They're probably going to give you a few referrals.
And that's also a good tip because at my brokerage, Keller Williams Legacy, we talk a lot about that. Right at this point, because a lot of people are they're a little wary about calling people and still talking about real estate. And one of the things that we talk about is the fact that if you are calling just to check in, hey, just making sure everyone is good. Um, Whatever the case, you're not even talking about real estate. What normally happens is they already know that you're in the business and they're going to naturally ask about how is business for you, how is the market, or whatever the case may be. And now that's your segue into now talking about your business or talking about real estate and not coming off as all I care about is selling you a house or whatever the case may be. So I appreciate that. um but like you said, and now what are those other things of value? Because as as a realtor, and I have these relationships with these lenders, what can I offer? What can I also offer my clients as value in addition, um, from a lender's perspective?
So another thing that we have that is unique is we have a loan called Mortgage with Champions. It's a mortgage program that's designed to help those people that are helping us on COVID-19.
Mm-hmm.
Your essential workers, police officers, firefighters, all medical professionals, no matter where in medical professional field they fall. So that your janitorial workers at the hospital all need relief right now. Your municipal workers,
Mm-hmm.
city, state, federal, Social Security Administration. We have our Mortgages for Champions program that eliminates all lender closing costs.
Mm-hmm.
So the closing cost is reduced by almost $2,000. Our
Mm-hmm.
preferred title company is also offering a significant discount for those transactions.
Mm-hmm.
And our real estate partners that we partner with also are offering some incentives. So we really want to support our essential workers that are making a difference and really are today's superheroes who are going out here and serving the public under all of the danger that
Well, that's great to know. Um, because they're out here, they're risking their lives, they're just working hard for the things, and they're seeing things that we're not even privy to. I listen to some of these radio programs, and when they interview some of the essential workers, and it's some unimaginable things that's happening, and they need some type of relief, and show them some love as well. Definitely, definitely. Um, but one of the good things about the conversation that we're having is real estate is still happening, and from the buyer side, you're speaking to an expert lender right here, Eric Stewart, and from the buyer side, you have programs that's available, money that's available, and now is a good time to buy because, like you said, you see the interest rates going down at some point. Um, so
they're already down. They're just
right,
gonna they should stay down and they should even lower.
right,
Not that you should wait and gamble with the market when it's off. You are already winning right
hmm
now. Interest rates are in the threes. If
right,
you miss another eighth of a point, so it goes from 3.5 to 3.3, it's not worth trying to time the market get the ultimate perfect mortgage and miss out on the opportunity. Remember, a month and a half ago, interest rates were at 3.25
hmm
on Monday. On Tuesday, they were 4.75.
right.
So
See,
events happening in the financial markets can change on a dime. So I wouldn't suggest that people try to wait. You should see if you qualify. What I did with my clients is we have about 35 clients right now
hmm
who gathered all their documents, did their application, pulled their credit, did everything except for actually apply for the mortgage and get an appraisal. So they just basically got ready, got what would be in a real estate purchase world pre-approved. Okay, they got pre-approved for a refinance, and then they sat and waited. And now, just last week, we told them the time has come. The market has shifted, and it's time to pull the trigger. So we're going to probably close in the area of 20 to 30 loans next month.
mm. Sounds a good month. You know, and here's the interesting part about real estate. When people talk about I'm gonna wait, if you're looking at is almost like there's a balance or there's a give and take, right? If interest rates are low, but it's a seller's market, yeah, you may pay more for the property, but your payments are going to be lower because of the fact that the interest rates are lower. But on the flip side of that, if you wait, you may pay a little less for the property, but the interest rates may be higher, which means so it's like is that give and take. Which one you want? You want to lower, you want to pay less as far as the whole property or the whole purchase, or you want to pay less every month. And that's one thing, and I'm glad I have these conversations because that's another another perspective to look at waiting from. Um,
Now,
so
reasons to wait. There's a reason to wait. Let's say in 2007, the market is crashing. Should you buy properties at the top of the market, knowing what's
right.
coming, or should that's a good time to wait to see what happens?
Mhm.
But in this case, we know based on the pre-COVID-19 demand
Mhm.
and lack of supply, and now the multiplied lack of supply,
Right.
values are not going to go down.
Right.
And I know a lot, I've talked to investors that think that values on houses are going to go down. They're not. It's just
Right.
too much lack of inventory.
And that's the same conversation I've been having because of the fact going in, we had a lack of inventory. And it's not going to be a long drawn out, at least we don't expect it to be this long drawn out ordeal. Within a few months, hopefully everything will be back running again. You're not going to have an influx of properties that's going to come onto the market just like that, but you are going to have buyers who are ready to buy. And we talk about this a lot on my show with different guests. People are sitting in the house right now. They're either getting divorced or they realize that this house is too small for me. I need a bigger house, or whatever the case. But they're starting to understand different things when it comes to their living situation, and there are going to be some people that are ready to buy. So, um, so if you are waiting, make sure you're educated about the market, not just guessing and or just being. It's not like buying a car at all. Is two completely different things, and that's where people get confused.
Exactly.
You
Yeah, and
know.
I don't have a problem telling my clients to wait. Like I had to tell all of these. It's 35 clients, I think,
Mhm.
that we had to sit on the sidelines and tell them wait. But they trust us because they work with us for years and years. So we tell them, no, don't do it yet. Wait a second, but I need you to start the process. But wait a
Mhm.
minute before we move forward. Those people are getting major benefit now.
Yeah, definitely, and that's the benefit of working with an expert that's in the market and listening to the expert. Don't listen to your aunt who purchased a house 20 years ago. Don't listen to your friend because they watch Flip This House. Listen to your experts and also do your research because a lot of times, sometimes you may have someone who may not be up on their game, but they're the expert. Also, do your own research so you can make sure that you're making the right decisions and educated guesses on what you should do and how you should proceed with your real estate transaction. Um, so, is there any jewels you want to drop? Anything you want to leave us with
I just
before we
wanted
go?
one thing I wanted to piggyback on what you were saying is your mortgage professional as well as your real estate agent. We are not here to advise you. We are ultimately order takers. However, we need to take orders from someone who is been educated enough to get in the driver's seat. So when we start, I don't get the passenger seat. I'm going to take control. I'm going to drive, but I'm going to educate. We're going to be in our ride, and I'm going to be giving you information and getting you educated, so that when we stop at our rest stop, it's time to switch seats, and now you can drive and you can take us to where you're trying to get to. So when you first work with your real estate agent or your lender. If they're just trying to tell you what to do as if they are the expert and you need to just listen, that's not the right person for the job. It requires patience, and ultimately, the best thing that I do and the best thing I think Corey does and working with his client base of investors and buyers is to educate.
Right.
So you need to feel like I do this 14 hours a day for the last 20 plus years. I don't expect you to know enough to be able to make the right decision when it comes to spending $400,000.
Hmm.
I've done this a million times. So it's my job to educate you how to come to the conclusion of what's right for you and your family.
What
Then
does mhm. Now, what does what from when they first sit down with you? You have a client who's going to first sit down with you. What does that process look like? What is that conversation like from the first sit down?
so one thing I think people misunderstand is that they're going to walk in and have a meeting and do these, and some folks are old school and they require face to face. With COVID-19, we are being encouraged to practice social distancing. Now, we are essential. I actually own the Pikesville Financial Center here in Pikesville. It's made up of a few businesses that serve the same client. Typically, it's going to be a home buyer, a homeowner. So, we are trying to limit the face-to-face exposure, but we are still open for business. My living room with my sweatpants on. I'm at work office, and my building is thriving. So when we get a new client, the first step is we get the introduction virtually or by a three-way phone call from our real estate agent or our referral. Or in my case, I just get a lot of phone calls from people who know where to go to get their mortgage. The first step is information gathering. So we're going to have a brief conversation, but then I'm not going to be the one gathering the information. That's going to be done by one of my loan officers, or my loan assistant, or my executive assistant. They are then going to get your credit report, help you to gather your documents. My role in the transaction is strictly to advise and oversee. So I'm going to be, it's kind of like in a doctor's office.
Hmm.
Doctor refers you to the specialist. Specialist tells you need surgery. I'm the surgeon.
Okay.
So, but we work by committee. So I have a strong team around me, an executive assistant, loan assistant, loan officer, processor, and myself to oversee the entire operation. And we are hands-on on every single file. Corey, you can attest to that.
Right.
That when working with me, it's 24/7. I answer the phone on Saturday, Sunday morning, Friday night. It doesn't matter. This is a $300,000 or $500,000 transaction. We don't do bank without.
And see, and that's very important because and when I'm speaking to my clients and I'm explaining to them the reason why I use certain people because when you're in a transaction, your team is very important, and everybody that's on that team has certain roles. And if certain things are not done in a timely manner, then the whole transaction is either held up or is dead at the water. And so that's why having make sure that you have a lender who is hands on and is going to make sure that they're getting certain things done. Your title company, make sure they are hands on and um, you can get in contact with them. You know, I always tell my clients that I'm the quarterback. You know, I'm a dish the ball off where it needs to go at the appropriate time, and I'm gonna make sure you know what's going on. That's but your team is very important when in a real estate transaction. Um, how can we get in contact with you, E?
So I'm easy to reach. I'm here locally, right in Pikesville. My office number is 410-844-3930. 410-844-3930. And of course, on the screen, you have my email address, estewart@rhc.com.
All right. Well, I want to thank you for being on the show and dropping some jewels. Just in case you missed it, I have to go back before we go. Just in case you missed it, we're looking at within the next few weeks is what Eric is predicting that we have that he's gonna have a loan product that is no doc, credit score probably anywhere between 640 to 680. Not sure the credit score, but a no doc loan program, and you can use an LLC to purchase your property.
It's not a new product, Corey. We've been doing this loan for almost a year, but they froze it when COVID-19 hit. So it's just going to be coming back.
Well, it's like when you go to the car dealership, right? Is it's not new to you, but it's new to somebody, right?
Very, very true.
So is this is a pre-owned car in this situation. Um, um, again, thank you for coming on to the show. Actually, I'll next time I'll be at your office. Just make sure you get the restaurant in there because I gotta eat, feed the fat boy, you know. Uh, but thank you for coming on. And if you guys have any questions about lending, I'm gonna put up his email address on the screen again. If you guys have any questions or anything about lending, please get in contact with Eric, and he can get those questions answered. Also,
And
for
you know
me,
what, Corey? I'm old school and I'm accessible. As much as I have going on, I answer every phone call. And I like to talk to people because they can ask the questions. I don't mind having them in writing if you want to. If any of the real estate agents that are listening or people listening that want to call and just have a quick question, it's no problem. They can call me.
what's your phone number again? What's your office number again?
410-844-3930.
All right. So if you guys got that, make sure you get in contact with Eric. And if you have any questions for me, go to Instagram. Well, you can send me. You can always shoot me a DM on Facebook, but also go to Instagram and follow Agent Cory Banks, Realtor 007, and or Agent Cory Banks 007. And Tony says hi. Tony James says hi, Eric.
Hey, Tony.
All right. Well, I will see you guys on Wednesday. This is should my money be scared with Agent Cory Banks, and we have this conversation with different aspects of real estate on Monday, Wednesday, and Fridays at 4 o'clock. Tune in to see who's my next guest on Wednesday, and dropping some more gems there as well. Until Wednesday, I'll see you guys later. Once again, yo, Eric, I appreciate you, man. Thanks.
Great job, Corey. Thanks for having me.
Thank you. You guys have a good day.
What radio station?